The best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM. It's now time for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements while Singapore shares inched higher today, tracking gains seen overnight in the US. So if you look at the Straits Times Index, it was up 0.21% at 4,298 points at about 11:55 a.m. Singapore time, and that is with a value turnover of some 572 million Sing dollars seen in the broader market. So let's take you through the closing numbers. The STI ended in the green as well, up 0.17% at 4,296 points. In terms of value turnover, that's 1.32 billion Sing dollars. The gainers trailed losers though 255 versus 267. Top advances for today we've got for you Venture Core, Asus and UOB, and top decliners we've got here Neo Incorporation USD, iFast and Propnex. Well, in terms of counters to watch, we have Capital and Capital DC REIT, because the manager of Capital DC REIT announced yesterday the acquisition of the remaining stake in 2 data centers from its sponsor Capital for a consideration of up to 8.4 million Sing dollars. Now, elsewhere from how China's financial regulators are reportedly considering cooling measures for the stock market, to the US NASDAQ proposing tighter listing rules for thinly traded firms and Chinese companies, we've got more international headlines in focus. Plus, more discussions surrounding the legality of Trump's global tariffs, and also how the president is set to host tech CEOs for a dinner in the newly renovated White House Rose Garden. Now, a lot to talk about, as you can imagine, and joining me on the line today is David Chow, Director of Azure Capital. David, welcome back to the show.
Hi, Jen. Happy Thursday to you and all the listeners out there.
A happy Thursday, and let's start with global news this time around. US President Donald Trump, he had asked the country's Supreme Court to quickly take on and rule on an appeal to overturn a federal appeals court decision that most of his sweeping tariffs on trading partners are illegal. We are looking at a timeline of early November for everything to be sorted out versus next summer. So what do you make of the news? And should the Supreme Court uphold the decision made at the federal appeals court level, what would this mean for the trade deals that were negotiated and reached before the decisions?
I think this is really a significant development, because what Trump is essentially asking is for the Supreme Court to short-circuit the usual appeal process and, make a ruling directly. So as such, that accelerates the timeline by months. Instead of dragging into next summer, we may now get a verdict as soon as in early November. And in trade policy, when uncertainty tends to weigh heavily on both businesses and investors, that speed matters a lot. Now, if the Supreme Court, I think, agrees with the lower courts, meaning the tariffs were imposed illegally, then we are possibly looking at a major shake-up. Tariffs that were collected could face challenges. Some industry that were shielded by those duties, lose their protection. And perhaps, most importantly, the trade agreements that were negotiated around those tariffs will suddenly look very unstable. But on the other hand, if the Supreme Court overturns the lower courts and rules in Trump's favor, then the takeaway is very different. It will effectively confirm that the president has, broad authority to impose tariff under, under national security. That will actually strengthen his negotiating position with perhaps China, Europe, and Mexico. But it also sends a signal to U.S. allies that the trade deals could be overturned easily, and that will somewhat undermine trust in U.S. commitments and could actually invite retaliation down the road.
Okay, and if we go back to the Singapore stock market as usual, David, how did the STI fare today, and any surprises if we look at the biggest movers and sectors? Because the STI in particular hit an intraday high of, I was looking here at 4,303 points, somewhere around there earlier in the day.
I think after a few weeks of consolidation, it's certainly nice to see STI finally breaking out of the previous range and hit the new intraday high. With this price action, I think the index has extended its gains to 13+% year to date, and most importantly, I think the breach of the 4,300 threshold actually marks both a technical milestone and a reflection of broad-based strength among the STI's 30 constituent stocks. So, and I think that what makes this new high even sweeter is that new intraday high, to be precise. Singapore equities have maintained robust momentum, even as regional markets have kind of slowed down. Yet the local market has bucked this trend. So I guess as Singapore equities remain undervalued relative to historic norms, and with earnings upgrades across key sectors, we think the STI extending its rally into year end is a huge possibility. But do watch out for what could transpire this month. The US stock market, for example, September is a time whereby you will tend to witness a seasonal pullback, following some rallies as investors reassess valuations and perhaps take profit. To be fair, the US markets indices didn't rally as much this summer, from June to July and August. I think the three major indices, I think, up anywhere between 7 to 11%. But individual stocks wise, if looking at just the MAC 7, they actually rally anywhere between 10 to 23%. For surprises, back to the local market, for surprises in the local market, I think given the new high reached today, I think we have seen new IPOs such as design format down nearly 5% after it went up 60 to 70% since its debut. So investors probably decided to take some money off the table and probably redeployed them to counters such as Sunly Environment, which went up nearly 8% today after a local broker did an initiation on it.
I see. If we zoom in on the counters to watch, we do have Capital and Capital DC REIT. Now, Capital DC REIT announced yesterday the acquisition of remaining stake in 2 data centers from its sponsor, Capital, for a consideration of up to 8.4 million Sing dollars. How have investors reacted to this piece of news?
Right, I believe investors have taken this news in their strides. If I look at the unit price of Capital DC REIT, it has been largely stable, showing only a slight dip of about 1% over the past few days. And looking at today's muted reaction after the announcement, that suggests the market isn't overly surprised. In fact, many analysts had already anticipated some form of consolidation of ownership of these assets. I think what's more important here is the strategic angle to it. By acquiring the remaining interest, Capital DC REIT has 100% full ownership of 2 hyperscale AI-ready data centers in Singapore. So this will give them full control, more operational flexibility, and of course the ability to capture the upside from future growth in hopefully demand for digital infrastructure. So all of this is being done at a very, I would say, decent price tag, around Sing dollar 8.4 million, with a just small contingent consideration compared to the combined valuation of these data centers of more than a B. And from a financial standpoint, I think management has also guided that the deal won't materially affect net NAV or distribution per unit in the near term. So I guess this is what makes up the muted reaction in the stock market.
Okay, and David, let's set our sights on oil tech now. The group said in a boss filing today that its ongoing projects in Indonesia are not affected by the current unrest in the country. How far is this a reason for investors to be optimistic about?
I guess the reassurance from oil tech is notable, based on our on-the-ground chat with our contacts in Indonesia. Yes, the unrest remains largely contained to urban areas and limited in scope, with minimal impact on major production facilities or even project sites. So oil tech statements that its Indonesia projects are unaffected, somewhat adds credibility to that finding. And from an investor standpoint, I think this is encouraging on several levels. First, in terms of operational continuity, if projects are insulated from unrest, revenue streams and project deadlines will remain intact, reducing risk to the company as well as the investors. And of course, this sends a message that a clear, proactive disclosure, actually reassures investors, and that will portray confidence in management. And lastly, in terms of macro resilience, we can see that the Indonesian government is really pushing a calm and optimistic tone, urging investors and entrepreneurs to stay focused on fundamentals, not sentiment. So putting it all together, while regional unrest always adds a layer of uncertainty, I think oil tech situation still looks well protected here.
Okay. Now, if you're just tuning in, we're in conversation with David Chow, Director of Azure Capital. David, let's talk about what's happening in the region, in particular how sources cited in a Bloomberg report said China's financial regulators, they are considering a number of cooling measures for the stock market as they grow concerned about the speed of a $1.2 trillion rally since the start of August. What does this mean for investors, and how concerned are you about this?
Fortunately, I don't think we are going to see such concerns, at least for the Singapore market. I hope not, after the STI Index has risen just 3.5% since August. So, China hasn't stepped in quietly like this, I think, for a while. But last time we saw a comparable scenario, I think it was way back in 2015, 10 years ago.
Okay.
At that time, you see a massive stock market rally, driven in part by, government encouragement of retail investment and, margin lending, which, unfortunately turned sharply into a crash. So fast forward to present, I think this 1.2 trillion since early August, which is a very enormous run-up in a very short time. I think this kind of speed always gets regulators' attention because while it's positive for sentiment, of course, on the other side, it raises fears of overheating and excessive speculation. So market has already reacted, with the CSI 300, fell more than 2% this week, which is a very steep decline, and the Hong Kong equities also came under pressure. So it's important to stress that, even though the government has come out to come out with statements like this, it's important that this doesn't make Beijing look like it's trying to crush the rally. Instead, I think the signals suggest that they want to stabilize it to ensure gains are somewhat more sustainable and not built purely on speculations. So for investors, I guess the message is just to stay cautious but not overly alarmed.
Okay. And in the meantime, over in the U.S., David, the US NASDAQ had proposed stricter listing standards, including 1, minimum public float for certain new listings, 2, faster process to suspend and delist thinly traded companies, and the third one is also quite interesting here, requiring companies primarily operating in China to raise a minimum of $25 million USD in IPO proceeds to qualify for listing. What do you make of the move? And overall, is this going to be a plus or a minus for global investors trading on the exchange?
I would say a significant tightening of standards from NASDAQ, and the timing is no coincidence. I mean, in recent years, we have seen a wave of small caps IPOs, many of which were thinly traded, and actually some were even linked to Chinese operating companies that raised concerns around liquidity, transparency. Yeah, so by introducing, I think, stricter rules, higher minimum public float and faster delistings, I think NASDAQ is really trying to protect the integrity of its market. So for global investors, this is generally a net positive. After all, a healthier market means less chance of wild swings driven by micro floats or stocks with limited disclosure, and at the same time it also reduces the risk of investors getting stuck in names that can't be traded out efficiently. So of course there's a trade-off. These rules may raise the bars for smaller legitimate growth companies that want to tap US markets. Some may decide to just this in Hong Kong or other venues, but for investors I think this will really mean fewer speculative opportunities, but in exchange, higher overall confidence in the quality of companies that do make it to NASDAQ.
Okay. And, David, we started this conversation looking at U.S. President Donald Trump. Let's end with him as well. Trump, he will host more than 24 tech and business leaders for a dinner in the newly renovated White House Rose Garden. Now, if we look at the guest list, here's where it gets interesting. They include Meta's founder Mark Zuckerberg, Apple CEO Tim Cook, Microsoft's founder Bill Gates, and OpenAI CEO Sam Altman. But Elon Musk of Tesla, not invited, not on that list. Any thoughts on that?
I guess the question is, has the bromance really ceased between Elon Musk and President Trump? I think it's the first time, since the election that President Trump is bringing such a heavyweight group of tech and business leaders together in one room in the newly renovated Rose Garden. So what this signals is that I think the White House perhaps want to portray that it's engaging directly with companies at the center of your AI, digital platforms, and innovations. So back to Elon Musk, we know that he has been one of the most outspoken voices on both AI and US industry policies, and we also know that in recent months he has a rather complicated relationship with Trump. So supportive at times but critical at others. So I think his absence may simply reflect scheduling or strategy, but it's kind of noticeable given how influential he is in both the EV and AI space. So I guess the takeaway is that this is a high-profile show of engagement. It builds goodwill, of course, reassure business leaders that they have a seat at the table, and perhaps sending a signal to investors that tech remains very much on Washington's data. So I guess the absence of Elon Musk just adds another layer of intrigue, given his role as one of the most interesting figures in the industry.
I see. Lots to watch indeed. Thanks so much for the insights today, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.